Welcome back to my channel. In my previous video I was talking about the MACD, that is the moving average convergence divergence, and I showed you how you can simply implement this trading strategy and make profitable income. In my previous video I shared with you a powerful but simple trading strategy using the MACD, that is the moving average convergence divergence, and I shared with you how you can use this simple strategy to generate money from the forex market, how you can use this simple trading strategy to become profitable in the forex market. And for those of you that watched the video from the beginning to the end, you saw how I simplified everything to your understanding so that you know how to implement this strategy. MACD is an indicator that so many forex traders are using to make money consistently in the forex market. And I promise you in that video that in my next video I'm going to share with you how you can combine the MACD with the moving average crossover to get a high quality trading setup, right? So that is what we are going to treat in today's video. I'm going to share with you a simple formula on how you can combine both the MACD and the moving average crossover to get a high quality trading setup. So the moving average works during a trending market, the same thing applicable to the MACD, right? So in the moving average we watch for crossover. So now you make use of the default setting of the MACD and you can use the same setting for the moving average, right? So if the MACD moving average setting is 26 and 9, right, which is to say the faster moving average is 9 while the slower moving average is 26, you can still use the same setting for your moving average. You can use the faster EMA as 9 period and the slower EMA as 26 period. So make sure that the setting with the moving average and the MACD are the same so that they can give you the same result, right? So the essence of using these two indicators is to give us a high probability setup, right? So when you combine these two indicators together, they give you what we call a high probability setup. So what you do is you simply watch the chart. The first thing is to watch the chart to know the market structure, right? And like I told you, this strategy, both the MACD and the moving average, work extremely well during a trending market. So you watch the market structure to know whether if the market is trending up or trending down or just ranging. If the market is ranging, I would advise you to stay away from the market, because in a ranging market the MACD and the moving average will give you so many false signal. In other words, we call it a whipsaw. You will see so many crossover, but yet the market is not moving anywhere. Rather, it's just going up and down, up and down, up and down. And if you decide to trade this strategy at this kind of chart, you're going to lose tons of money. So that is why it is always advisable that you watch for a trending market. So that is why I said before you start using this strategy, make sure you look at the market structure to make sure that the market is clearly in a trend, either uptrend or downtrend. Then after that, you now watch for crossover, right? First, you watch for MACD crossover. If the MACD line crosses below the signal line and then the 9 EMA crosses below the 26 EMA, then you know that the trend have changed direction. That will become a confirmation to you that the trend have changed direction. So you now trade in the direction of the trend. So right now we're going to go into practical so that I will show you an example, a visual example of how you can trade this strategy profitably, right? So we are going to head straight to my screen, right, so that we can talk more on this strategy. Now if you watch on my screen now, you can see that the two indicators has been plotted, right? like I said, if you want to make use of this strategy, you need to have trading view. Like I said, trading view is one of the best platform to trade the forex market. It's one of the best platform for your technical analysis, right? You can use the trading view for your technical analysis, and after that you can now go to your MT4 or MT5 to place your trade. So once you have your trading view on, you can simply go to the indicator, right? And first you type in MACD, that is moving average convergence divergence, right? Once it pops out, you click on it. Then after that, you leave the default setting. Then you go to the indicator again and you type in moving average exponential, right? Once it pops out, you click it twice so that it will come out twice, right? So once it come out twice, you make the first setting 9 period and EMA. The second setting 26 period EMA, right? So the 9 period is the faster moving average, while the 26 period is the slower moving average, right? So you use the same setting from the MACD to apply at the moving average. So once you have done that, something like this will happen in the chart. So the chart will be like this, right? So this one is the MACD, while this one is the moving average. So right now you have two indicators, right? You have the MACD indicator and you also have the moving average indicator. So you have to color the moving average line so that you know the faster one and the slower one. So that is why it is applicable that you change the color, right? So for the faster moving average, you might change the color to red, pink or purple, while the slower moving average, you might change the color to black, blue or green, depending on your chart or the color you prefer. So after that, you now watch the chart, because what you're watching now is a crossover. So now if you watch, you see that what happened here is that whenever a crossover occur, right, you see that there's a change in the market, there's a change in market structure, right? Whenever a crossover occur, there is a change in the market structure. Now watch here. Now you clearly see that the MACD line, this blue line is the MACD line, while the red line is the signal line, right? The purple line is the 12 exponential moving average, while the black line is the 26 exponential moving average, right? So once you've plotted this moving average, you can use any setting of your choice for the moving average, right? I'm just using this one as an elaborative method, right? You can use any setting that you prefer, right? But for the sake of this tutorial video, we are using the 12 period EMA and the 26 period EMA. The 12 period EMA is the faster moving average, while the 26 period EMA is the slower moving average. So if you want, you see that the 12 period is this purple line, while the 26 period is the black line. So what you're watching now is the crossover. So first you watch for crossover at the MACD, and after that you watch a crossover at the moving average. So now if you watch clearly, you see that the MACD line, which is the blue line, crossed below the signal line, which is this red line. And then what happened? The 12 EMA, which is this purple line, crossed below the 26 EMA, which is this black line. And then what happened? The trend now changed from an uptrend to a downtrend. So if you watch, you see that the trend was formerly in an uptrend going up, right? So when the crossover occur, the trend now changed direction and started heading down, right? So you can clearly see the crossover. The MACD line, which is this blue line, crosses below the signal line, which is this red line, and then you also wait to see the reaction of the moving average. So after the MACD line, which is this blue line, crosses below the signal line, which is this red line, you have to exercise patience and wait for the moving average, right? So once the 12 EMA, the 12 exponential moving average, which is this purple line, crossed below the 26 exponential moving average, which is this black line, then you cannot confirm to yourself that the trend have changed from an uptrend to a downtrend. Then what you do is you just wait for the candlestick that caused the crossover to close. Like if you watch, you see that this is the candlestick that caused the crossover. So once the candlestick closed, you place a sell trade, and then your stop loss should be above the moving average. Do you understand what I'm talking about? So you watch for the candlestick that caused the crossover to close. If you watch, you see that this candlestick was the candlestick that caused the crossover. Once the candlestick that caused the crossover closes, what you do is you place the sell trade at the close of the candlestick, and your stop loss will be above the 26 exponential moving average, right? So where will you take your profit? You wait for another crossover to take your profit, right? So if you watch, you see that this is another crossover that occur. So once another crossover occur, it means there's another change of trend, so you simply take your profit, right? And if you want to ride a trend again, you can still place another buy trade. I hope you understand what I'm talking about. So if you watch here now, you can see again that the MACD line, which is the blue line, crosses above the signal line, which is the red line, right? And what happened again here? The 12 EMA line now crosses above the 26 EMA line, and then the trend now changed from a downtrend to an uptrend. So you can now see the confirmation that you need. First, you wait for the MACD line to make a crossover, right? And then you now wait for the moving average to make a crossover for you to be able to enter a trade. So now this is what I'm talking about. You can clearly see that the MACD line crossed above the signal line, but the EMA line didn't cross, right? So telling you that this was a fake out, this was a fake crossover. So do you see why you use the second indicator to filter out fake signals? So if you watch clearly now, you can clearly see that the MACD line, which is the blue line, crosses above the signal line, which is this red line, right? You can see the crossover. But what happened here? The 12 EMA line, which is this purple line, didn't cross above the 26 EMA line, which is this black line, right? So the trend is still down. So if you rely only on the MACD line, you would have gotten a fake signal here. You have gotten a fake out here, because the crossover only happened at the MACD, but it didn't happen at the moving average. So you see the reason why combining the moving average crossover and the MACD line gives you a high probability trading setup. So if you watch again, you can clearly see that after the crossover, the MACD line may cross below the signal line again, and there was no crossover at the moving average. And what happened? Another fake signal. Now watch what happened again. Now you cannot clearly see now the MACD line now crossed above the signal line. You can clearly see the blue line crossed above the red line, which is the signal line. And then what happened here? The 12 EMA line, which is this purple line, now crossed above the 26 EMA, which is this black line. And then what happened? The trend now changed direction. So you can see that the trend have finally changed from a downtrend to an uptrend. So now we have an uptrend. So you cannot clearly see how powerful this trading strategy is once you know how to implement it very well. If you watch here again, you can clearly see again that the MACD line, which is the blue line, crossed above the signal line, which is the red line. And then what happened? The 12 EMA, which is this purple line, now crossed above the 26 EMA, which is this black line. And then what happened? The trend now changed from a downtrend to an uptrend. So this is one of the simplest trading strategy that anyone can master. Have it at the back of your mind that forex trading is not always reliable, right? Sometimes you lose, sometimes you win. So having a simple trading strategy is all you need, because if you're looking for all this complicated trading strategy, the scenario there is that there is no 100% trading strategy. Every strategy has its ups and downs, right? So you will lose and you win. So instead of wasting your time trying to master a difficult strategy that you know, even if you keep on trying, you cannot master it. Why not focus your attention on the simplest trading strategy? Once you are able to master this simple trading strategy, you now implement it alongside with your money management, risk management, and your self-discipline, because these are the only things that will help you to become profitable in the forex market. Your money management and your self-discipline coupled with your trading strategy. So the most important thing that you need right now is a self-discipline to be able to respect your rule, and the money management to be able to economize your money, your resources, because you use money to make money in the forex market. If you blow your account, you don't have money again to trade. So it is advisable as a beginner to always make use of the simplest trading strategy, so that you start cashing out earlier, instead of you looking for those complicated strategy that will get you confused. The more you try, the more confused you become. The more you try, the most confused you become. So if you can be able to implement this MACD and the moving average, if you can be able to master them, join them together, you have a high probability trading setup. I'm not assuring you that you are going to be in a winning streak all the time, right? Sometimes you get a fake out, just like the one I showed you here. Sometimes you get a fake signal, sometimes you lose, right? That is the part of the business. You win and you lose, but that is where risk reward comes in, right? You risk lower to gain higher. So I'll advise you, if you are trading with this strategy, always have a high risk reward ratio, right? If you are risking let's say $10, make sure that your take profit should be at least $30 or $40, right? If your stop loss is going to be $10, let your take profit be $40 or $30. Have at least 1 to 2 or 1 to 3 risk reward ratio and above. This is the only way you can survive in this business. The higher your risk reward, the better, because no matter the strategy you use, there will always be pitfall. There will always be the period where you are going to be in a wrong signal, where you are going to be in a losing streak, right? So money management, risk reward ratio, and self-discipline still remains very important in trading. So my advice to you guys is, go to your demo account, TradingView, backtest this strategy, the MACD and the moving average crossover. Backtest it very well, and if you are 100% confident that the strategy is working for you, then you can now implement it in your real account. So ladies and gentlemen, that is all I have for you in today's video. I hope you love this video. If you do, give us a thumbs up. Don't forget to subscribe to my channel for more educative content like this, and also don't forget to turn on the notification icon to be the first to be notified whenever I publish new content. And for those of you that want to join my mentorship program, you can read everything on the description of this video. To join my mentorship program, you need to get my premium video, very simple trading strategy that I use to trade the forex market and make money consistently. Once you get the video, it's a 2-hour video that details my trading strategy and my money management rule. So once you get the video, watch it thoroughly, and I promise you, your life will never remain the same again. So ladies and gentlemen, that is all I have for you in today's video. I will see you again in my next update. Peace out.